Good morning, everyone, and welcome to our webinar titled Equity Edge, Navigating Opportunities in a Shifting Landscape. I'm Demisha Greater, Multi-Manager Investment Analyst here at Net Group Investment, and I'm delighted to host you for today's session. Now, we know that we are living through a period of profound change, politically, economically, and structurally, both in South Africa and globally as well. Equity markets are responding to shifting narratives from elections and policy reforms to inflation dynamics and retirement realities. Our first speaker is JP Landman. He is a renowned political commentator, and he'll be sharing his perspective on South Africa at the crossroads. And his presentation is titled Political Trends That Are Shaping Investment Decisions. JP, it's over to you.
Good day. South Africa at the crossroads. It sounds like a very, very heavy topic. And in a sense, it is. So what I would like to do this morning is to talk you through a couple of political trends that are changing the environment in South Africa and that are influencing our investment decisions. And the first big point on the crossroads is simply what is happening to our economic growth, particularly if one puts it in the context of population growth. Now, many of you will recollect this slide. I've used it all these years. And basically what we do is we mix economic growth and we subtract from it population growth in any 12-month period. And what you see there is the history going back 50 years, all the way to 1975, coming up to 2024. Yes, I know it sounds like 49 years, but it's 50 years. And what it shows us in the years in which the blue bars go up towards the ceiling, the country is getting wealthier, we're making more money, the economy is growing faster than the population is growing. And of course the reverse when the slides go down towards the floor. And you can divide the 50 years into three very clear and distinct periods. The first more or less 20 years on the slide, from the mid-70s to the mid-90s, was a period when South Africa got poorer. And you can see the margins there. On average, incomes went down by 11% over an extended almost a period of 2 decades. And then we had democracy and the period of what I like to call the period of the three TMs, Thabo Mbeki, Trevor Manuel, and Tutu Mboweni. And what the three TMs gave us was a period of very solid and constructive macroeconomic policies, which gave us the kind of growth rates that took those blue bars towards the ceiling, and you can see the overall trend line in the green arrow. Per capita incomes improved by a massive 1/3 over that period, and South Africa became substantially wealthier. And then the third period is from 2014 to the end of 2024, a period of 11 years, and the figures, the graphics speak for itself. You can see that we are again getting poorer, and it has been running now for quite a while. Yes, there were some years, particularly 2021, where the blue bar goes towards the ceiling, but really it follows in 2020, which was the COVID year, when the blue bar really almost dropped through the floor. And the bottom line is that for that period of 11 years, we got poorer by about 6.5%. So at the end of December 2024, we were 6% worse off than what we were a decade earlier. Now you can say 6% is not a lot. Fact is, if a nation at large is 6% poorer, it means there are a hell of a lot of people who are poorer than what they were. It means there's more unemployment. It means we're not creating the jobs that we want to create. So that tells us that we're sitting in a sense at a kind of a crossroads. Now, 6 months ago, at the beginning of the year, we were all very hopeful that 2025 will be the year in which economic growth will come back and will be higher than population growth. And just to give you the numbers, our population is now growing at about 1.3%. At the beginning of the year, we were hoping for economic growth of 1.9%. Now, if you grow the economy at 1.9 and you grow the people at 1.3, clearly there's a surplus, and that surplus starts the process of getting wealthier again. But then came Mr. Trump in April, and he knocked the stuffing out of the world economy with his tariffs also applicable to South Africa. And at the moment, the best forecast that we have for 2025 is economic growth of around 1%. And there you have the numbers. 1% economic growth, 1.3% population growth, it's quite clear that 2025 will again be a year in which we're going to get poorer. So the high hopes that we had at the beginning of the year, pre-Trump, has been dashed by the Trump tariffs, and we're now in for a 12th year in which the country at large, the society at large, will be getting poorer. And that's really the nub of the crossroads at which we are. Because the question now obviously arises, how do we get out of this low growth trap in which we are? And from a political point of view, from a policy point of view, it's really very simple. There are only two options. The one option is you go for easy money. What is easy money? Low interest rates. Government runs a much bigger budget deficit. You print money to cover the deficit. You spend the money and you hope that will stimulate the economy. That's the easy money formula. It's a formula which the Americans have used quite extensively before and also after COVID. The other option is that you do so-called structural reform. And what is structural reform? You address the basic problems in the economy to improve productivity. And that's really the key point I want to underline. Structural reform has got many meanings for many different people, depending on where they stand ideologically. I use it in the strict sense that it's measures that you take to improve productivity in your economy. So those are your two options: easy money or the hard work, the hard graft of doing things that make the economy more productive. Now, this government has made very clear where it stands. Its choice is structural reform, and there's even a name for it, and the name is Operation Vulindlela. It was started in October 2020. It was given substance over the years. And what we have so far, we've had phase one of Project Vulindlela, which is reform in 5 sectors of the economy as well as in visas. And they are the 5 sectors, and you will recognize them. Spectrum. There was a time when we had huge fights about spectrum release, upgrading to 4G and 5G, that sort of thing. That is all now in process. You can tick it, done and dusted. Then there was load shedding, electricity, energy problems. Well, the response to that was to deregulate, really deregulate totally the electricity market in South Africa. And the monopoly that Eskom has enjoyed for best part of 100 years have come to an end. There's a last citadel standing, and that is the so-called regulatory clearing account, which enables Eskom to claim back money which they didn't realize from sales in previous years. We recently have had an adjustment around that, and it's quite clear that that citadel is also going to fall. And then there's railways, ports, and water. 5 critical sectors in the economy. The economists like to talk about network industries because, in a sense, although the industry is not that big, you take water, for example, it's a small number in the overall GDP figures, but it's a fairly critical element. If you don't have water in your economy, you really can't have the other GDP either. So the network industry is an important industry to get right. And what we're seeing at the moment is a strong political will, a strong political push to change the arrangements in those 5 industries to enhance more private sector participation, to improve productivity, and from that to collect the growth dividend. Then earlier this year, the Government of National Unity not only confirmed the principles of Operation Vulindlela, they also extended it to a phase 2, which is what currently is being worked on. Now you carry on with the work from phase 1. There's still a lot of work to be done in water. There's still a lot of work to be done in ports and railways. But you carry on with reform of local government, with reform of spatial inequality, and with digital transformation. Now, of those 3, local government, spatial inequality, those are 2 hard nuts to crack. And precisely how we do that over the next couple of years is going to be interesting to watch and observe. Digital transformation, not so much. You can mobilize capital and you can make it possible to make big things happen there. But that's where government's attention is. That's where government's political ambitions are. And I point them out because at the heart of the economic policy choices you make are also the political choices. And it's quite clear here what those choices are. Look, just to take an example, At the moment, Transnet can carry about 170, 180 million tons a year on its network towards the harbors for export. The aim is to get that up to 250 million tons. Now, 250 is a huge improvement on 170. You do that kind of thing, it means your productivity numbers automatically climb, you export more, you have more growth, and the economy expands faster. That's the real life experience of making these changes in the network industries, in this case, in the case of railways. Now, what will these changes bring? The best readings we have so far come from the Bureau for Economic Research at Stellenbosch, which has been confirmed by the Reserve Bank research, which has been confirmed by National Treasury research. And I must tell you, if you take those three institutions, the BER, Treasury, and SARB, you will not show me bigger firepower in the country when it comes to econometric analysis and modeling. If there is, please send me an email. I would like to meet those people. And all of them come to the same conclusion. And that is that if Operation Vulindlela reforms are fully implemented and carried through, we can change this economy from a 1% economy, which is where we've been for the last 11, 12 years. We can change it to a 3, perhaps even a 3.5% economy. That is the growth dividend that can come out of the structural reform, which is at the moment the key policy platform of the Government of National Unity. And as long as the Government of National Unity exists, those are the policies that will be pursued. And I'll come back to the longevity of the Government of National Unity. And now, of course, although this is a little bit outside government's policy framework of Operation Vulindlela, we have this very strong push from the Reserve Bank, from Governor Lesete Kganyago, to lower the inflation target from 4.5%, where it's currently operating, to 3%. We'll have to see how this ends. If I have to put up a bet of a bottle of wine, then I think that's where we're going to go. We will end up at some point with a 3% inflation target. And again, you can see that fits into the bigger thing of structural reform to improve productivity, to improve competitiveness. If you trade with other countries in the world and their inflation is sitting at 2.5%, 3%, then you don't want to sit at 5 and 6%, 4.5%, 5%. It's too high. That differential over time obliterates your competitiveness. So I think it's quite right to go for a lower inflation target. Precisely how it's implemented, that we will see over time. I suspect in November, with the money budget, we'll get guidance on that. So we have a growth problem. We talked about that on the previous slide. How do we get out of that growth problem? You see the details summarized on this slide. All that now has to happen is carry on doing the work and affecting the results in real life. Let's talk a little bit about tariffs, and I've already said the impact that the Trump tariffs had. Beginning of the year, we were looking at 1.7, 1.8, 1.9% growth. Now we're looking at 1%. Some people are looking at 0.9% growth. So the Trump tariffs have cost us a lot of economic growth. Make no mistake about that. So we cannot ignore international and geopolitical factors. And where does South Africa fit into that? I think it's important to just go back a little bit in history. And I want to go back to 2012, when South Africa published the National Development Plan. And what the National Development Plan basically said, and it's already 13 years ago, actually quite prescient, it said that what will happen, or what is happening in the world, is that power is shifting from the west to the east. Power is shifting from the US and North America and Northern Europe towards the east. And that is exactly, and it suggested, its recommendation was, maintain your relationships with the old, because that's where historically South Africa's trade relationships were, but also build and develop new relationships with the new world, with the new centers of power. That was essentially the recommendation from the National Development Plan. Now, if you look at our export numbers, that has already happened. What we mustn't forget is governments don't export. Governments don't export. It's business people and businesses that actually do the exports. And it looks as if our business people have taken very seriously what the National Development Plan recommended. There you can see the numbers of our main export partners. You can see that Asia takes, which is China, India, and the 10 Asian countries, take 35% of our total exports. These are 2023-24 numbers. Africa take 25%. You can see there what the main products were. Europe, 25%. North America, which is Canada and the US combined, 8%. Middle East, 4%. South America and Oceania, 3%. And those add up to 100%. So you can see where South Africa's exports are going, but you can also see how it has shifted over time. This slide would not have wouldn't have looked like this if we go back 15 or even 20 years, certainly not when we go back to the beginning of our democracy. And so in that sense, what is happening between us and the US is an important issue to be managed, and it looks as if people are trying their best to manage it. But look at that North America number. It's 8% for North America. Canada takes about 1%. It leaves 7% for the United States. And that 7% is divided 50-50. 7%, half of it, 3.5%, are minerals, which the United States are not putting a tariff on because they want the minerals. It's important to them. They're not going to make it more expensive for themselves to buy it. So we can export without tariffs. It's the other half, the other 3.5% that are carrying the tariffs. And you know where that pain is falling. It's falling on some of the motor car industries, automobile industries. It's falling on certain agricultural products, not everything, but some agricultural products, mainly in those two sectors of the economy. And if a better deal cannot be negotiated with the US, all that is up in the air at the moment, then it means that companies in those two sectors, automobiles, motor car manufacturing, and agriculture, will take some beating. And those companies will have to look for exports elsewhere. It's actually quite interesting to talk to farmers and people in the agricultural industry. They're now working on exports into China. They're working on exports into the Middle East, which up to now has never really been an issue. But that's the diversification that will have to take place. And then, of course, the fact of the matter is, it is not just South Africa which is affected by the Trump tariffs, the whole world is. And that is also changing the attitude of the world and making it possible to export to areas which previously may not have been open to us. An obvious one is China. At the recent meeting of the Forum on China-Africa Cooperation, Xi Jinping, the Chinese president, offered and did in fact announce that China will take away all tariffs on all products coming from African countries into China. The only exception is Eswatini, because they recognize Taiwan, and obviously China is not looking kindly upon that. But in exchange, they want certain counter benefits. Now, in the case of South Africa, Xi Jinping is quite happy to lift all tariffs of South African products going to China, but they want access to the South African manufacturing industry. Now, if you can get Chinese manufacturers to put up factories here and manufacture products here, in exchange, we can export tariff-free to China. That opens up a whole new world. My understanding is that Deputy President Mashatile has submitted a trade proposal to China on a recent visit that he had there about 2 months ago, and we will see how negotiations around that will pan out. So, to some extent, South Africa has already repositioned itself, certainly from where it was 20 and 30 years ago, and it's a process that must carry on further. And I think there are 2 points I want to make. The first one is, due to our constitutional system which we have, which is one of proportional representation, we will have more and more coalition governments, not less and less. The big benefit of a proportional system above a constituency system is every vote counts the same. You cannot have a situation where some votes are reduced in value because of the way the constituency is configured. We know that this is an old problem of constituency systems. We had it in this country before '94. We have it currently in the UK. We have it in the US and elsewhere. We have been saved the horror of that kind of system. I know a lot of people want to switch to constituencies. They must be careful what they wish for. The big benefit of a proportional system is it doesn't matter where in the country you live, it doesn't matter who you vote for, your vote counts exactly the same as the vote of the next person. And secondly, all votes get counted. Whether you live in Messina in the north or Cape Town in the south, they get added together and it gives you a representative or two in Parliament. But that means that smaller parties benefit more and bigger parties come under more pressure. And it almost makes coalitions inevitable because nobody can get to 50%. We've seen that in 2024. Excuse me. We've also started seeing it in the previous round of local government elections in 21, and we will certainly see it again next year in the 2026 local government elections. So more coalitions, not less. More of it, not fewer. More of them, not fewer. But coalitions have got a particular price. And the price is that it requires a certain style of politics. It requires a certain style of governance. And to make it simple, you can have two ways of handling a coalition. The one is where you have coalition partners who serve together in a government or in a city government or a local government, but they fight a lot. You can call it managed conflict. They work together, they rule the place together, but it's a tense relationship. It's not an easy relationship. Managed conflict, I think, is a good description. The other alternative is where the same parties in the same government applies a different style and they try and solve problems. They use creative processes to come to a consensus on what should be done and how the city or the province or the country should be run. What we have at the moment in the current government of national unity is the first one. We have a style of managed conflict where every party is trying to score brownie points, where every party is trying to say, look at me, I'm the better one, follow me, trust me. What we don't have is enough seeking of creative solutions to our problems. So I hope you are with me on the distinction between those two styles of handling a coalition. And my own feeling is that the managed conflict model is not a sustainable one. Why not? Because it leads to too much bickering. Two parties snapping at each other all the time, or more than two parties snapping at one another all the time. It's certainly not a good way. The public is getting wary of it. The public wants progress. The public wants solutions. And while this bickering is going on, we don't see the solutions appearing. And opinion polls prove that. Opinion polls tell us that people are losing confidence and they would like to see more progress in the government of national unity. So move away from the managed conflict to more a consensus solution-orientated style is the price of coalition politics. And our politicians would have to learn that, as would our followers. You know, sometimes politicians just do what their followers demand of them. And I think we would all have to adjust our style and our attitude a little bit to come to a more creative mode of running the country. There's also another form of coalition which is currently applicable in 4 or 5 municipalities in KZN and which may become the norm in many local governments after next year's election, and that is what is called comfort and support agreements. Now, the way it works in KZN at the moment, the IFP runs 4 or 5 municipalities where they don't have majority support, but they are supported by the DA. Now, the DA doesn't share any of the executive power. They're not in the mayoral committee, none of that. They sit in the opposition benches, but their point of departure is that they will support the IFP government to enable that government to do the things that they have to do. Now you can see the comfort and support agreement is much closer to the managed conflict, not the managed conflict, the creative consensus model, and it may be that that becomes much more the norm after next year's elections. Will the government of national unity survive? Yes, I think it's quite clear. I've held this view from the beginning of the GNU. Nobody's going to walk away. Who will walk away? Is constantly my question to those who say, how long will it last? And secondly, the ANC is not going to kick the DA out. That's also clear. So as long as Mr. Ramaphosa is the leader, which he will be until the end of 2027, so we still have 2.25 years to go, the GNU will exist, it will carry on, and in 2.25 years, a lot can be achieved and a lot can be done. I don't see that changing. And even after 2027, we'll have to see who emerges as the front runners and who can become leaders of the various parties and president of the country. The second political development, which I think is very important and one to watch, is what I want to call a shift from a developmental state to a partnership state. Now, what is a developmental state? Developmental state is a strong ANC mantra which they've believed in very, very strongly since they've come into power. And essentially, it's a strong state that directs the society, that directs the economy, that allows companies to make money, but you set very strict and strong trajectories along which that must happen. That was the ANC's ideal, and it's something which was copied from Southeast Asia, the rise of Korea, the rise of Taiwan, and the rise of China. What I think we've seen in the last 5 to 10 years is that idea has lost its traction. Politicians and political people may still use the terms, and they may still feel a certain loyalty to it, but in practice, what developmental state activities do we see? Where are the SOEs that are helping to develop the country? Electricity, transport, logistics, water. Show me examples. Where are the activities run by the state, exercised by the state, that actually boost the economy? I think we've seen that train has left the station, and it's not running along the lines that one would like to see. On the other hand, what has been happening in the last 3-4 years is that the role of the private sector, particularly in the network industries, is being enlarged. We spoke earlier about energy, we spoke about water, transport, and so on. That train has also left the station in a direction or along a trajectory where there is more private sector involvement, not less. And this is quite a meaningful and a fundamental development, because for 150 years, South Africa has had a model and approach where the state does infrastructure, where the state is responsible for things like roads, railways, waters, and so on. That is our traditional heritage. That is our legacy. And we've had it, as I've said, for more than 150 years. What we're now experiencing the last couple of years, and it's coming through very strongly now, is that we are moving away from that model. We're moving towards a model where we say, let the private sector come in and run certain railway lines. Let the private sector come in and run certain ports, or at least sections of ports, and in that way try and lift productivity. I think it's a pretty profound development. It wouldn't have been possible without political room allowing that to happen. And of course, the reason we have it is because we've had crises in many of these areas, which just gives credence again to the old story that without a crisis, you don't really get progress forward. We're certainly seeing a lot of that. And I think the bottom line here is that we're creating new industries where state monopolies used to hold sway. That is really the one-line summary. We're creating new industries in which there's competition, in which the private sector is participating, in which private capital is making itself available, but also demanding a return. And that's a completely different ballgame from what we are used to. Okay, so where does all this leave us? What is the so what from these 6 slides that I've shown you? And the first one is that the tariffs have indeed hurt us very hard. And where 2025 was the year in which we could have recovered from sub-population growth, economic growth, I'm afraid 2025 will now become the 12th year in which we again will have to suffer population growth higher than economic growth. Population growth 1.3, economic growth roughly 1%. You can see for yourself from a common sense point of view what's going on. I think it's very important to note that the political choice that has been made in the country, in spite of all the noise and all the dust that goes around and all the rhetoric that's being used by both the government and its opponents, is that the choice has been made for structural reform in the network industries, which will lift productivity and hopefully also lift growth. That is the expert evidence we've got from people like the Bureau for Economic Research, That is the promise of Operation Vulindlela. Now, so far, it looks as if these things are coming through. If you look at the growth numbers, which were published this week, then investment has declined. That's quite true. But where was the big decline? It was with public corporations, and it was in the public sector. In the private sector, private investment have actually increased by quite a substantial number. And that's exactly the kind of switch that you want. You want the private sector to invest more, and in that way give us the growth that we need. So this project Vulindlela and the program of structural reform is a critical element of the GNU. I see the GNU continuing to at least until after 2027. And even after that, there will still be a coalition government with all the compromises needed in that kind of process. And that gives us the great opportunity of implementing the reforms that we need to sustain growth. Thank you very much.
JP, thank you so much for that. I just want to maybe start off on the topic of economic growth. You spoke about the BER's projection of about 3.5% in terms of where South Africa could be sitting. And a big part of that would be ensuring that the reforms that we have are actually being implemented. So now we've got Operation Vulindlela, and now we're in the second reform. Now, how can investors, I suppose, practically track the effectiveness of Operation Vulindlela, and what, I suppose, metrics should we be looking out for to ensure that there is actually progression when it comes to this particular agenda?
Look, I think there are two sets. The first set is in the short term. You can look at particular announcements around allowing private sector companies, for example, into railways. Now, the Transport Minister, Barbara Creecy, recently announced that 11 transport lines, railway lines, bids have been received from, I think, 25 bidders, and they will now negotiate detailed contracts for the private sector taking over those lines. So that's in the short term, that's a real announcement. It's a real practical step. Now, when will they start operating? When will those agreements kick in? That we will have to watch as the news unfolds. And I think that takes us into a longer term assessment, and that is, in the end, more goods must be transported on those lines. More goods must go through the ports. That's a very practical way of looking at the impact. And then even longer down the line, is growth changing? Is the growth rate lifting up? That's really what all this is about. Now, it won't happen in the first 6 months. It might perhaps not even happen in the first year. But over 2 or 3 years, we will certainly be able to see whether the growth in the economy is responding or not. So there's a short-term measurement, there's a medium-term measurement, and there's a longer-term measurement. And those are the things that investors must watch.
I mean, we can't not discuss the political aspect of things. And I suppose, we are definitely living in very interesting times. I'd like to talk a little bit about coalition politics, which obviously is something that you're very familiar with. But maybe what do you see as being the long-term implications for coalition politics when it comes to policy consistency?
Well, we've had a very good lesson earlier this year with the budget, where there was a remarkable budget fight that should not have taken place. So yes, you're right. The assumption in your question is right, that coalition politics can undermine consistency. And that again puts the pressure, puts the responsibility on the coalition partners not to bicker and not to be in a managed conflict, but to look for solutions all the time. If that budget process was handled a little bit differently by both the Minister of Finance and other people, that could have gone in a different direction. But I think, to me, that is what, that's a learning process we must go through. That's a learning process we must go through. And it involves, for me, that switch from a mindset of managed conflict, the mindset of bickering, to a mindset of looking for solutions. That, I think, will satisfy investors.
JP, you alluded to the fact that we might get some more color from National Treasury around the implementation of this 3% target that the South African Reserve Bank has put forward in terms of that inflation marker. I just want to get a sense from you of, I suppose, what the implications of this will be, especially when it comes to times of wage negotiations. We know that South Africa, has a debt problem. We have also been struggling with ensuring that, the path of fiscal consolidation is actually being adhered to. So do you think, the fact that we would be going in with a lower base, so to speak, in terms of that inflation number, that this bodes well for us in terms of our bargaining power at the negotiation table?
Well, that's certainly the idea. The idea is that if the inflation target is a 3% and the target is achieved, 3.5%, that people then wouldn't go for 6% increases, which is what we're currently having. That is certainly the idea, and I think unions and other interest groups will be very hard pressed to push for 6% increases, whether it's in wages or in their prices or in their services, while inflation is sitting at 3%. One of the big culprits are local governments, who put up the tariffs for electricity and water and rates and taxes by 3-4 times the rate of inflation. That kind of nonsense will have to stop when you have an effective inflation target of 3%. So yes, in that sense, it'll help.
JP, thank you so much for that. I really appreciate your analysis. And of course, this really helps us to get a sense of the lay of the land in terms of political developments as well as the economic impact as well. JP Landman, of course, he is an independent political commentator.